Assalamualaikum and good day. In this video, we will cover on Chapter 6, Cost Evaluation. At the end of this session, students should be able to understand and identify the aspect and fundamental of costing analysis, and secondly, understand and utilize the costing approach and method in dealing with engineering design project. There are two parts of content in this chapter. The first one is on fundamentals of costing evaluation, and the second one is on method of developing cost estimation. So for the fundamental, we must know what it is meant by cost. So cost is monetary valuation in dealing with the aspect of material, good or services, risk issues, resources, and etc. It means that whatever that use money to produce our product or to market it, it is under cost. So what is costing evaluation? It is a process of determining how resources are being utilized based on cost allocation and benefit. So why we need to do costing evaluation? So the importance of costing evaluation is basis for identification for product selling price, basis for identification for product profit projection, right? So from all the costs that involve in producing and also in marketing of the product will be calculated so that we know what is the selling price for our product and also how much profit that we can gain from our product. There are four types of costs. The first one is fixed costs. The second one is non-recurring costs. The third one is variable costs. And the fourth one is recurring costs. When we talk about fixed costs, it is a constant independent of the output or activity level. The annual cost of property tax for a production facility is a fixed cost. The fixed cost is independent of the production level and number of employees. It means that any cost that occurs that did not depend on our production or on our output will be classified as fixed costs. The second one, we have non-recurring costs. For non-recurring costs is one that occurs at irregular interval and is not generally anticipated. The cost to replace a company vehicle damaged beyond repair in an accident is example of non-recurring costs. After that, we have a variable cost. It does depend on the output or activity level. It means that if the output is more, then the variable cost increase. For example, the raw material cost for production facility is a variable cost because it varies directly with the level of production. Increase in production will also increase in raw material cost. Last but not least, we have recurring costs. It is one that occurs at regular interval and is anticipated. For example, the cost to provide electricity to a production facility is a recurring cost. Now let's take a look on the difference of non-recurring costs and recurring costs. An example of non-recurring cost is capital costs. So for non-recurring cost or capital cost, it is one-time expense only. For example, we pay for the building or the factory and maybe payment for the land to make the factory, for example. Another example is on development, investment, and other costs that are paid only once. And then for recurring costs, it is focusing on operation costs. It is repetitive, direct or indirect, which vary depending on the production. Recurring costs usually occurs daily or weekly or monthly. So in this slide, it shows us the difference between fixed costs and variable costs. For fixed costs, it is the cost associated with your business product that must be paid regardless of how much you sell. For example, rent for office space or storefront. Another example is weekly payroll and also equipment depreciation. Otherwise, for variable cost, it is the cost directly related to the sales volume of your business. For example, delivery or shipping charge. With increase of your production, it will also increase in delivery or shipping charge. And then sales commissions and also advertising and publicity. Under fixed cost, we have unchanged cost of production rate. For example, on investment cost, we have insurance and property tax, and also on overhead costs, for example, on rental or utilities bill. Both of these costs we pay either monthly or weekly. It is already fixed. And there are some that we pay annually, for example, on insurance and property tax. And then for variable cost, it is change cost of production rate. For example, cost of material will change with the production rate. And then direct labor cost, maintenance costs, and also packaging costs. All these costs change according to production. Why we learn on cost? It is because we need to develop cost estimation. The cost estimation is important for product pricing. So what is product pricing? It is product selling price that simultaneously and positively affect the customer interest and greatest profit generation. So one of the best methods to identify the price of product or services is by implementation of break-even chart. Break-even chart shows and portrays the profit and loss on the selling price of the product and also price and manufacturing cost of product. This is the example of break-even chart. This chart will tell us where the break-even point will occur. So, how to produce break-even chart so that we can do analysis? The first thing that we need to do, we need to determine the variable cost per product. For example, over here, the variable cost where we plot depending on unit sold. For example, if only one unit, how much will it cost? And then for 3 units, how much will it cost? And also, for example, 6 units, how much will it cost for variable cost? Variable cost includes material, labor, and purchase part. That's why with increase of units, it's also increase in variable cost. Then we need to determine the fixed cost. Over here we can see we have fixed cost. Fixed cost does not depend on the number of production or the number of sales. It doesn't matter along all this line, even the unit sold is increased, the fixed cost is maintained. After that, we need to draw the total cost as a function of the number of products on the chart. So the total cost is over here. The total cost is fixed cost plus variable cost. So we need to add up at every point. For example, for 3 units sold, we add variable cost over here with fixed cost. So we will get 1 point. So we mark that as our total cost. We should also do for all units sold. For example, for 6 units sold, we calculate fixed cost plus with variable cost. So it will show our total cost over here. And then we make a straight line as our total cost line. After that, we need to determine a sale price of the product. The sale price we denote as total revenue, and then draw the sale as a function of the number of the product on the chart. So the price will times with the number of units sold, and then we mark and we get the total revenue. So the intersection of the sales line with the total price is break-even point. Let us watch this video on how to build break-even chart.
Welcome. In this video, I'll be constructing a break-even chart using the given information. First, we find the break-even point in units by dividing the fixed cost by the contribution margin, and that gives 45. The break-even point in dollars can now be found by calculating total revenue at break-even, and that gives 2,700. To construct the graph, we plot units on the horizontal axis and dollars on the vertical. Now, suppose for units, we have a capacity of, say, 110, then we can go as far as maybe 120. as far as we capture the break-even unit of 45 centrally. And for dollars, I can do 1,000 per unit here to ensure the break-even dollars of 2,700 is captured. So the break-even point here is 45 and 2,700. Now the fixed cost is the same for any volume of production, so we draw a horizontal line for fixed cost here at 1575. For the total revenue function, we know that if we sell 0 units, total revenue will be 0. So total revenue line is satisfied by 0, 0, and we pass through the break-even point. For total cost, when 0 units is purchased, then total cost equals fixed cost. So the total cost line will start at fixed cost here and pass through the break-even point. Now, before breaking even, the total cost is higher than total revenue. So this region here constitutes losses. And after breaking even, total revenue is greater than total cost. So this region constitutes profit. And that's it. Thanks for watching.
That's all for this video. I hope you can understand on cost and pricing. I will see you in the next chapter. So thank you. Have a good day.